You ever wonder how a 24-year-old immigrant who couldn't get hired at any tech company ends up building a $200 billion empire that terrifies Amazon? I mean, genuinely terrifies them. Here's exactly how it happened. 2004, Ottawa, Canada, and Tobi Lütke is sitting in this tiny apartment, and from what I've pieced together from his later interviews from multiple sources, he's staring at his laptop screen absolutely furious. I mean, just completely fed up, and he's trying to sell snowboards online, just a simple online store for snowboarding equipment, and every single e-commerce platform he's tested is complete garbage. They're slow, they're clunky, they crash constantly, and he spent 2 months trying to make this work. 2 months. Now, here's the documented part, and this comes up over and over again in interviews he's given. Tobi isn't a business guy. He's a programmer, a really good one actually, and he does what programmers do when software doesn't work. He decides to build his own, just for his snowboard store, just to sell some equipment. And what happens over the next 2 years will accidentally create the biggest threat Amazon has ever faced. I mean, the biggest threat. A platform that will power over 2 million stores, a company worth more than $200 billion at its peak. $200 billion. And the strategy he uses to compete against Amazon? Nobody in Silicon Valley saw it coming. Nobody. I'm Alex Morgan. This is Behind the Billion. And today, and I mean today, we're breaking down how Tobi Lütke went from being a broke German immigrant who couldn't get a job at any tech company to building Shopify into a $200 billion empire that fundamentally changed how commerce works on the internet. And I think this is one of the most important business stories of the last 20 years. Now, look, I spent the last week completely obsessed with the story. I mean, I have spent at least 40 hours reading everything I could find. Tobi's interviews going back to 2006, Shopify's SEC filings going back to 2015, the early blog posts from 2006 when nobody knew what Shopify even was, podcasts where he breaks down specific decisions. And here's what's wild about this story, and this appears over and over again in everything I read. Tobi never meant to build a company. I mean, he was just trying to sell snowboards, but the software he built to solve his own problem ended up being worth more than the entire snowboarding industry combined. I mean, the entire industry. And here's why this matters right now, and I want you to understand this. Because everyone talks about competing with Amazon like it's impossible, like Amazon's just too big, too powerful, too entrenched. But Tobi figured out something nobody else did. And this principle appears over and over again throughout his career. He didn't try to beat Amazon at their own game. He armed Amazon's enemies. He gave millions of small businesses the same tools Amazon had. And it worked so well that by 2021, Shopify merchants were doing more combined revenue than Amazon's third-party marketplace. And so think about that for a second. I mean, really think about it. One guy, starting from zero, no venture capital connections, no Silicon Valley pedigree, no nothing, builds something that legitimately threatens the biggest company on earth. So how did he actually do it? What were the specific decisions that made this work? And this is what I want to focus on today, because these principles appear over and over again, not just in Tobi's story, but across every successful company that's competed with giants. But to understand how Tobi built Shopify, you have to go back to the beginning, back to when he was just a kid in Germany who was obsessed with computers. And this is something that appears over and over again in his interviews. Tobi Lütke was born in 1979 in Koblenz, Germany. And here's what we know from his interviews and his background, and this appears over and over again in everything he said. He wasn't a great student. School bored him. He dropped out of high school at 16, which in Germany is actually not that uncommon if you go into vocational training. And that's exactly what he did. He became an apprentice programmer. Now, this is important context, and I want you to understand this. In Germany, they have this apprenticeship system called Ausbildung, and it's legitimate. You work at a real company, you learn from experienced programmers, and you get paid while you're learning. Tobi apprenticed at a company called Siemens, which is one of the biggest engineering companies in the world. He's learning to code in a professional environment at 16, 17 years old. And so from what he's described in various interviews, and this comes up over and over again, he was good at it. really good. He loved the logic of programming, the problem-solving aspect. He's working with C++, he's learning database design, he's building real software that real companies use. And by the time he's 20, he's got 4 years of professional programming experience. 4 years. But here's where his life takes a turn, and this is something that appears over and over again in his story. He meets a Canadian woman online. They start dating long distance, and in 2002, when he's around 23 years old, he moves to Ottawa, Canada to be with her. Now, this is a massive decision. I mean, think about this. He's leaving Germany, leaving his job, moving to a country where he doesn't have a work permit yet, doesn't have a network, doesn't know anyone except his girlfriend. And here's where the story gets interesting, and this is documented in multiple interviews. He starts looking for programming jobs in Ottawa. He's got the skills, he's got the experience, he's got a solid portfolio, but he can't get hired. And according to interviews he's given, companies would look at his resume and say, "You don't have a computer science degree. You dropped out of high school. Sorry, we need someone with a degree." Now, I'll be honest, when I first read about this, it felt almost poetic. Here's a guy who's been programming professionally for years, who actually knows how to build software, getting rejected because he doesn't have the right piece of paper. And this rejection, this frustration, it's going to become a huge part of Shopify's culture later, and this appears over and over again. Tobi becomes obsessed with hiring based on ability, not credentials. But in 2003, 2004, he's just trying to survive. He picks up freelance programming work here and there, nothing consistent. And he's got this hobby, this side interest in snowboarding. He loves snowboarding. And at some point, and the exact timeline here is a bit fuzzy from the sources I've read, but it's around 2004, he decides, I'm going to start an online store selling snowboarding equipment. Now, this wasn't supposed to be a big business, and from what he said in interviews, and this comes up over and over again, it was just, let me try to make some money selling stuff I'm passionate about. He called it Snow Devil, and this is where everything changes. Because to sell products online in 2004, you needed e-commerce software, and Tobi starts testing all the available options. There's OsCommerce, there's Miva Merchant, there's all these early platforms. And according to what he's described, and he repeats this over and over again, they were all terrible. They were slow, they crashed, they were hard to customize, the admin interfaces were confusing. And so Tobi's sitting there thinking, I'm a professional programmer. I can build something better than this. So he does. He starts building his own e-commerce platform just for Snow Devil, just for his snowboard store. Now, here's the key detail that makes this whole story work, and this appears over and over again in his interviews. Tobi had recently discovered Ruby on Rails. This is a programming framework that had just been released in 2004 by a guy named David Heinemeier Hansen. And Ruby on Rails was revolutionary for its time. It let you build web applications way faster than traditional methods. You could do in days what used to take weeks. And so Tobi falls in love with Ruby on Rails, and he starts building his e-commerce platform using it. He's coding late at night, building features, testing things, and from what I can tell from early blog posts and interviews, and this is something I spent a lot of time researching, he's not thinking about building a company. He's just solving his own problem. He needs a good online store. The existing software sucks, so he's building his own. But here's what happens, and this pattern appears over and over again throughout entrepreneurship. He launches Snow Devil in 2004, 2005, and the store works. It actually works really well. It's fast, it's reliable, customers can check out smoothly. And Tobi's friends start noticing. Other people who want to sell stuff online start saying, hey, what software are you using for your store? That's way better than what I'm using. And this is the moment. This is the pivot point where Tobi has a realization that changes everything. So it's 2005, early 2006, and Tobi's running Snow Devil. And he keeps getting the same question over and over and over again. What platform are you using? Can I use it for my store? Now, according to interviews he's given, and this comes up over and over again, his first instinct was no, this is just custom software I built for myself. But people kept asking, and at some point, and I've seen him tell the story multiple times, he's talking to a friend, a guy named Daniel Wynand, who was a designer, and another friend named Scott Lake. And they start discussing, what if we turn this into an actual product? What if we let other people use this software? The idea was simple, and this appears over and over again in early Shopify history. Charge a monthly subscription fee, let people set up their own online stores using Tobi's platform software. software as a service. This was still a relatively new concept in 2005-2006. Salesforce had proven it could work for business software, but for e-commerce, most people were still buying software and installing it on their own servers. And so Toby, Daniel, and Scott decided to try it. They started a company. They called it Jaded Pixel, which is a terrible name, but whatever. And they started building Shopify as an actual product. Now, here's where I need to be transparent about something. And this is the way I would describe this. The exact timeline of early Shopify is a little unclear from public sources. What I can tell you for certain is that they officially launched Shopify in June of 2006. I found the original launch announcement. It was posted on a Ruby on Rails forum. Very low-key, just, hey, we built this e-commerce platform, check it out. The initial pricing was simple, $29 a month for a basic store, $59 for more features, $99 for the full package. This was way cheaper than the alternatives at the time, which often cost thousands of dollars up front. Thousands. And here's what's fascinating, and this pattern appears over and over again. Shopify's early growth was almost entirely word of mouth. They didn't have a marketing budget. They didn't have venture capital. Toby and his co-founders were bootstrapping this. They'd take on freelance programming work to pay the bills, and they'd spend their free time building Shopify. And so from what I've read in early blog posts and forum discussions, the first customers were mostly other programmers and designers who'd heard about Shopify through the Ruby on Rails community. These were technical people who could evaluate the software and see that it was actually well built. But then something interesting starts happening, and this appears over and over again. Those early customers start telling their friends, hey, I just set up an online store in like 2 hours using this thing called Shopify. You should check it out. And Shopify starts getting non-technical customers, people who aren't programmers, people who just want to sell stuff online and don't want to deal with complicated software. By the end of 2006, Shopify has a few hundred stores using the platform. Not huge numbers, but it's growing, and the monthly recurring revenue is starting to add up. $29 times a few hundred stores, that's real money. Now, 2007 arrives, and Toby faces his first major decision. Does he keep bootstrapping this, growing slowly, maintaining control, or does he raise venture capital, hire a team, and try to scale this thing? And so, according to what he said in interviews, and this comes up over and over again, he was initially skeptical of venture capital. He'd heard the horror stories about founders losing control of their companies, but he also recognized that if Shopify was going to compete with the big players, if it was going to become a real platform, they needed resources. So in 2007, Shopify raises their first round of venture capital. I found the details in an old TechCrunch article. It was a seed round of $250,000 from a group of angel investors. Not a huge amount, but enough to hire a couple of employees and stop doing freelance work on the side. And here's where Toby makes a decision that defines Shopify's entire trajectory. And this principle appears over and over again throughout the company's history. He decides that Shopify's mission isn't just to build e-commerce software. It's to arm the rebels. That's literally the phrase he uses in later interviews. We're arming the rebels against the empire of Amazon. Think about what's happening in 2007, 2008, and I want you to understand this context. Amazon is growing like crazy. They're dominating online retail, and the narrative in the tech world is Amazon's going to win everything. Small retailers can't compete. The future of commerce is a few massive platforms controlling everything. And so Toby looks at that narrative and says, what if that's wrong? What if we can give small businesses the same tools that Amazon has? What if we can make it so easy to start an online store that millions of people do it? Millions. This becomes Shopify's strategy, and this appears over and over again. Don't compete with Amazon directly. Instead, enable Amazon's competitors, all of them, every small business that wants to sell online and don't want to deal with complicated software. But here's the thing, and this is crucial. Having a good strategy and executing that strategy are two completely different things, because what happens next almost destroys the entire company. 2008 arrives, and if you know anything about 2008, you know what's coming. The global financial crisis. The economy collapses, the stock market crashes, companies start going bankrupt left and right. And Shopify, this tiny startup with maybe 1,000 stores on the platform, is right in the middle of it. Now, here's what happens, and I'm pulling this from interviews Tobi's given and some old blog posts I found. And this pattern appears over and over again in startup history. Small businesses start shutting down. Shopify's customers, these online store owners, they're seeing their sales drop. Some of them are going out of business. And when a business shuts down, they cancel their Shopify subscription. And so Shopify's churn rates spike. Churn rate, for anyone who doesn't know, is the percentage of customers who cancel each month. For a subscription business, high churn is a death sentence. You need to acquire new customers faster than you're losing old ones, or the math just doesn't work. And from what Tobi's described, late 2008, early 2009, Shopify's churn rate is getting scary. They're losing customers almost as fast as they're adding them. The company's not growing. It's stuck. Plus, and this is the part that almost kills them, the venture capital market dries up completely. In 2007, it was relatively easy to raise money. By 2009, investors aren't funding anything. They're all in survival mode, trying to protect their existing investments. And so Shopify needs to raise their Series A, their first major funding round. They've been trying to close it for months. And according to what Tobi said in interviews, and this comes up over and over again, they came very close to running out of money. Like weeks away from having to lay off the entire team and shut down. Weeks. I'll be honest, when I read about this period, it reminded me of so many other startup near-death experiences. Tesla in 2008, Airbnb selling cereal boxes to stay alive. These moments where the company is right on the edge, and one decision either saves it or kills it. For Tobi, the decision came down to this. They had one investor who was still interested, a VC firm called Bessemer Venture Partners. But Bessemer was offering tough terms. Lower valuation than Tobi wanted, more control for the investors. It wasn't the deal Tobi had hoped for. And he had to make a choice. Take the money and survive, or risk holding out for better terms and running out of cash. And so, according to what he shared publicly, he took the money. In December of 2008, Shopify raised $7 million in Series A funding from Bessemer Venture Partners. The valuation was around $10 million, which meant the investors owned a significant chunk of the company. A significant chunk. But here's the thing. They survived. That funding gave them enough runway to get through the financial crisis. And more importantly, it gave Tobi time to figure out how to actually grow this thing. Because having customers is great. Having revenue is great. But if you want to build a billion-dollar company, you need more than just survival. You need a strategy for scale. And that's exactly what Tobi starts working on in 2009, 2010. Okay, so 2009, 2010, Shopify's survived the financial crisis. They've got funding, they've got a few thousand stores on the platform, but they're still tiny compared to the big players. Amazon's marketplace is massive. eBay's huge. Even Etsy, which launched around the same time as Shopify, is getting more attention. And Tobi's thinking about this problem constantly, and this appears over and over again in his interviews. How do we compete? How do we grow when there are these giants who have way more resources, way more brand recognition, way more customers? And here's where Tobi makes a strategic decision that changes everything. And this principle appears over and over again throughout Shopify's history. He decides that Shopify's not going to try to be a marketplace. They're not going to compete with Amazon or eBay by creating their own destination where people come to shop. Instead, Shopify is going to be infrastructure. They're going to be the platform that powers other people's stores, and those stores are going to be branded however the merchant wants. It's not going to say powered by Shopify all over the store. It's going to be the merchant's brand, their design, their identity. Now, this might sound like a small distinction, but it's actually massive, and I want you to understand this, because when you sell on Amazon, you're renting space in Amazon's house. Amazon controls the customer relationship, Amazon has all the data, Amazon can change the rules whenever they want. You're building your business on someone else's platform. But with Shopify, merchants own their store. They own their customer data. They control the experience. Shopify is just providing the tools. And so Tobi starts pitching this philosophy really hard, and this appears over and over again. He's giving talks, writing blog posts, doing interviews, and the message is always the same. Don't rent, own. Build your own brand, control your own destiny. This resonates, like really resonates, because by 2010, 2011, a lot of Amazon sellers are getting frustrated. Amazon keeps taking a bigger cut. Amazon keeps changing the algorithm. Amazon's starting to compete with their own sellers by launching Amazon Basics products. And these frustrated Amazon sellers start looking at Shopify, thinking maybe I should have my own store. Maybe I shouldn't be dependent on Amazon for everything. But here's the challenge, and this comes up over and over again. Even if merchants want their own store, they still need traffic. They still need customers. And Amazon's big advantage is that millions of people go to Amazon every day looking to buy stuff. If you have your own Shopify store, how do you get people to visit it? And so Tobi and the Shopify team start solving this problem in a few different ways. And this strategy appears over and over again. First, they make it really easy to integrate with Facebook and Instagram. This is 2011, 2012, when social media shopping is just starting to become a thing. Shopify builds tools so merchants can sell directly on Facebook pages, directly in Instagram posts. Second, they invest heavily in SEO and content marketing. They create guides and tutorials teaching merchants how to drive traffic to their stores, how to use Google Ads, how to build an email list, how to create content that ranks in search. Third, and this is clever, and this pattern appears over and over again in successful platforms, they start building an app store. Just like Apple has the App Store for iPhone apps, Shopify creates an app store for e-commerce tools. Want to add live chat to your store? There's an app for that. Want better email marketing? There's an app. Want to integrate with your accounting software? There's an app. And here's why this is genius, and I mean this is really brilliant, because every app developer who builds for Shopify has an incentive to promote Shopify, because if more merchants use Shopify, more people will use their app. So suddenly, Shopify has hundreds of companies helping them grow without Shopify having to pay them. By 2012, 2013, this strategy is working, and this appears over and over again in their growth numbers. Shopify is growing fast. They've gone from a few thousand stores to over 100,000 stores. Revenue's growing like 50-60% year over year. 50-60%. And Tobi starts thinking about something that most startup founders don't think about until later. He starts thinking about going public, taking Shopify from a private company to a publicly traded company on the stock market. Now, I need to be transparent here, and this is something I want to be clear about. I don't know exactly when Tobi first started considering an IPO, but based on SEC filings and public statements, it's clear that by 2013, 2014, Shopify's leadership is actively preparing for this. So 2014 arrives, and Shopify's doing well. They've got over 200,000 merchants using the platform. They're processing billions of dollars in sales every year. Revenue is around $100 million annually, growing fast. But they're also not profitable, and this is important context. Shopify is still losing money. They're spending heavily on growth, hiring engineers, building new features, marketing to new merchants. This is the classic venture capital playbook. Grow fast, worry about profits later. And Tobi makes a decision to take Shopify public. And according to interviews and SEC documents, and this comes up over and over again, the logic was this. Going public would give them access to a lot more capital. It would let them hire the best talent because they could offer stock options that actually had value. And they would give the company credibility, make them look like a legitimate long-term player, not just another startup that might disappear. The IPO process is intense, and I've read some accounts of what it was like behind the scenes, and it sounds exhausting. You have to prepare all these financial documents, do a roadshow where you pitch investors, set a price for the stock, coordinate with investment banks. It's months of work. Months. And so Shopify filed their S-1, which is the official IPO registration document, in April of 2015. I actually read through this document. It's public on the SEC website, and it's fascinating. It lays out the entire business model, all the risks, all the financials. The numbers at the time of the IPO were this, and I want you to understand these numbers. Shopify had 243,000 merchants. They'd processed $15 billion in gross merchandise volume, meaning that's how much total sales happened through Shopify stores. Revenue was $105 million in 2014. Net loss was $22 million. So they're growing fast but losing money, which is fine for a tech company in growth mode, but it makes the IPO valuation tricky. How much is this company actually worth? Shopify set their IPO price at $17 per share. The company was valued at around $1.3 billion. That's a unicorn valuation, over $1 billion, which was a big deal at the time. The IPO happened in May of 2015, and I remember reading about this at the time, though I wasn't covering it professionally or anything. The stock opened at $28 per share on the first day of trading. It shot up 65% from the IPO price immediately. 65%. Now, that initial pop is actually pretty common for tech IPOs. It means the company probably underpriced the shares, left money on the table. But from Shopify's perspective, they raised over $130 million in that IPO, which gave them a massive war chest to keep growing. And here's what's interesting about what happens next, and this pattern appears over and over again. A lot of tech companies, after they go public, they slow down. They get conservative. They focus on quarterly earnings reports and keeping Wall Street happy. Tobi does the opposite. Shopify goes public and then accelerates growth even faster. 2015, 2016, they're launching new products constantly, and this appears over and over again. Shopify Plus for enterprise merchants, Shopify Capital to provide loans to merchants who need funding, Shopify Shipping to give merchants access to discounted shipping rates. And they start making acquisitions. In 2015, they buy a company called Boltmade that does mobile app development. In 2016, they acquire Kit CRM, which does marketing automation for small businesses. The merchant count keeps growing, and this pattern appears over and over again. By the end of 2016, Shopify has over 375,000 merchants. Revenue hits $389 million. They're still not profitable, still losing money, but the growth trajectory is clear. And the stock market loves it. Shopify's stock price keeps climbing. By early 2017, it's over $100 per share. The company's worth $10 billion, more than 8 times the IPO valuation. I mean, 8 times. But here's the thing, and this is where Tobi shows his strategic thinking. He's not building Shopify to be just an e-commerce platform. He's building it to be the anti-Amazon. And that means going after Amazon's biggest advantage, which is logistics. Okay, so 2017, 2018, Shopify's growing fast, everything looks great. But there's one major problem that keeps coming up, and this appears over and over again in merchant feedback. Merchants would say, I love Shopify for building my store, but shipping is still a nightmare. I can't compete with Amazon's 2-day shipping. I don't have their logistics network. And this is Amazon's secret weapon, right? It's not just the marketplace. It's not just the customer base. It's fulfillment by Amazon, FBA. You send your products to Amazon's warehouses, and they handle all the shipping, all the customer service, all the returns. For a small merchant, that's incredibly valuable. And so Tobi's thinking about this problem, and in 2017, according to various interviews and press releases, Shopify starts working on their own logistics network. They call it the Shopify Fulfillment Network. Now, I'll be honest, when I first read about this, I thought it was insane. Building a logistics network to compete with Amazon? Amazon spent decades and tens of billions of dollars building their fulfillment centers. How is Shopify, a company that's like 1/50th the size of Amazon, supposed to compete with that? But here's Tobi's strategy, and it's actually pretty clever, and this appears over and over again in his thinking. Shopify's not trying to build their own warehouses from scratch. Instead, they're partnering with existing logistics companies and third-party fulfillment centers. They're creating a network of partners using technology to coordinate everything, giving merchants access to fast shipping without Shopify having to own all the infrastructure. They start testing this in 2018, 2019. Initially, it's invitation only. Only certain merchants can use it. And from the reporting I've read, it's messy at first. Logistics is hard. There are delays, there are mistakes, there are inventory issues. But Shopify keeps investing in it, and this pattern appears over and over again. They acquire a robotics company called 6 River Systems in 2019 for $450 million. This is a company that makes warehouse robots, the kind of robots that move products around fulfillment centers automatically. And Tobi's telling investors, telling the press, and this comes up over and over again, this is the future. If we want to truly compete with Amazon, we need to offer the same level of service: fast shipping, easy returns, reliable fulfillment. Now, while this is happening, Shopify's core business is still growing like crazy, and I want you to understand these numbers. By 2019, they've got over 1 million merchants on the platform. 1 million. Revenue hits $1.5 billion, and here's the key metric. They finally turn a profit. First time in the company's history. They make $42 million in net income in 2019. The stock market goes nuts. Shopify stock hits $300, then $400, then $500 per share. The company's worth over $50 billion by the end of 2019. I mean, $50 billion. And then 2020 arrives, and everything changes. March of 2020, the entire world shuts down because of COVID. Retail stores close, restaurants close, nobody's going anywhere, everyone's stuck at home. And what do people do when they're stuck at home? They shop online. E-commerce explodes, like not just grows, explodes. According to various industry reports I've read, e-commerce in 2020 grew more in 3 months than it had in the previous 10 years combined. I mean, think about that. That's how dramatic the shift was. And Shopify is perfectly positioned for this moment. And this appears over and over again in their quarterly reports. Because all those small businesses that used to rely on foot traffic, all those local stores that had physical locations, they suddenly need an online presence immediately. Shopify becomes the solution. According to their quarterly reports and earnings calls, which are all public, Shopify adds hundreds of thousands of new merchants in 2020. In a single year, they go from 1 million merchants to nearly 2 million merchants. Nearly 2 million. Revenue for 2020 hits $2.9 billion, almost double what it was in 2019. And here's the crazy part. They make $319 million in profit. Their profit margin is like 11%, which is really good for a company in growth mode. The stock goes parabolic, and I'm using that word very deliberately, because if you look at a chart of Shopify's stock price in 2020, it literally looks parabolic. It goes from around $400 per share in March to over $1,000 per share by November. Tobi's net worth skyrockets. He owns a significant stake in Shopify, and as the stock goes up, his personal wealth goes from a few $billion to over $10 billion. He's one of the richest people in Canada now. But here's where the story gets really interesting, and this pattern appears over and over again. Because Shopify is not just riding the COVID wave, they're making aggressive moves to cement their position. In 2020, Shopify announces they're partnering with Walmart. This is huge. Walmart's one of the biggest retailers in the world, and they're letting Shopify merchants sell on Walmart's online marketplace. It's a direct shot at Amazon. They also partner with TikTok and Pinterest, making it easy for merchants to sell directly through social media. This is the future of commerce, and Shopify is positioning themselves right in the middle of it. And then in 2021, Shopify makes their biggest move yet. They announced they're going to spend $1 billion, a billion with a B, to build out their logistics network, fulfillment centers, warehouses, delivery systems. They're going all in on competing with Amazon's logistics advantage. The market's mixed. Some investors love it, think it's the right strategic move. Others are worried that Shopify's trying to do too much, that they should focus on what they're good at, which is software, not logistics. But Tobi's committed, and this appears over and over again in his statements. He's saying publicly, this is what merchants need. If we want to help them compete with Amazon, we have to give them the same capabilities. And then we get to 2021, the peak. November of 2021, Shopify's stock hits $1,700 per share. The company's market cap, total value, hits $220 billion. I mean, $220 billion. For context, that's more than the entire market cap of PayPal, more than Salesforce, more than almost every tech company except the absolute biggest ones like Apple and Microsoft and Amazon. Tobi Lütke, this German immigrant who couldn't get hired at any tech company 20 years ago, who started building e-commerce software just to sell snowboards, is now worth over $12 billion personally. $12 billion. And here's a statistic that blows my mind, and this appears over and over again in Shopify's data. According to Shopify's data from 2021, the total value of sales that happened through Shopify stores was over $400 billion. $400 billion! That's more than the gross domestic product of entire countries. Shopify merchants, all combined, were doing more sales than Amazon's third-party marketplace. Think about what that means. Tobi's strategy of arming the rebels actually worked. He didn't beat Amazon directly, but he armed millions of small businesses to compete with Amazon, and collectively, they're bigger than Amazon's marketplace. This is the moment. This is the peak. Shopify is the poster child for the pandemic tech boom. The stocks had an all-time high. Tobi's getting profiled in every business magazine. Shopify is being discussed as one of the most important companies in the world. And then 2022 arrives and it all comes crashing down. The Federal Reserve starts raising interest rates, inflation's getting out of control, and the Fed's trying to cool down the economy. And when interest rates go up, tech stocks get hammered, especially unprofitable growth stocks. Shopify's stock drops hard. By mid-2022, it's down to $400 per share, about 75% down from the peak. The company's market cap falls from $200 billion to about $50 billion. Tobi's net worth drops by tens of billions of dollars. Not that he's going broke or anything, he's still a billionaire. But on paper, he lost more money than most people will ever have. And there's more pressure, and this appears over and over again in the reporting. The logistics network that Shopify invested billions into, it's not working as well as they hoped. Fulfillment's expensive, the economics aren't great, and with the economy slowing down, merchants are getting more price-sensitive, less willing to pay for premium services. In July of 2022, according to public announcements and news reports, Shopify lays off 10% of their workforce, about 1,000 employees. Tobi sends this memo to the entire company and it gets leaked to the press, where he basically says, I made a bet that the pandemic e-commerce boom would continue and I was wrong. We overhired. This is on me. And then in May of 2023, Shopify makes a massive strategic shift. They announced they're selling their logistics business to Flexport, another logistics company, in exchange for equity in Flexport, basically admitting that the fulfillment network didn't work out the way they hoped. Now, I'll be honest, when I was researching this part of the story, I was trying to figure out, was this a failure? Did Tobi make a mistake betting on logistics? And here's my take, and this is just my interpretation. I think the logistics bet made sense strategically. Merchants do need better fulfillment options. But the execution was harder than Shopify expected, and the timing was bad. They invested billions right before the market crashed and e-commerce growth slowed down. Could they have made it work with more time and more capital? Maybe, but they decided to cut their losses and refocus on what they're best at, which is software. And even with all the drama of 2022 and 2023, Shopify's still massive. As of 2024, according to their latest earnings reports, they've got millions of merchants. They're doing over $7 billion in annual revenue. They're profitable again. The stock's recovered somewhat, trading around $80 to $90 per share as of when I'm recording this. The company's worth around $100 billion. Tobi's net worth is around $10 billion. So yes, they're down from the peak. Yes, they made some bets that didn't work out perfectly, but they're still one of the most important e-commerce companies in the world. So why does this story matter right now? Why am I telling you about Tobi Lütke and Shopify in 2024 or 2025? Because here's what's happening, and this pattern appears over and over again. We're in this moment where everyone's talking about how big tech companies are too powerful, how Amazon and Google and Meta control everything, how it's impossible for small players to compete. And Shopify is the counter example. Shopify proved that you can compete with Amazon not by beating them at their own game, but by enabling their competitors, by building tools that democratize access to technology. And I'm seeing this same playbook getting used right now in AI, and this appears over and over again. You've got all these companies. I'm thinking of companies like Hugging Face, like Stability AI, like some of the open source AI projects, who are saying, we're not going to try to beat OpenAI and Google at building the biggest AI model. Instead, we're going to give everyone access to AI tools. We're going to democratize AI the same way Shopify democratized e-commerce. That's the pattern. And it works. It actually works. Now, does it always work perfectly? No. Shopify's logistics badge shows that even good strategies can fail if execution is hard or timing is bad. But the core idea, empowering the rebels against the empire, that's powerful. And there's another lesson here about credentialism and talent, and this appears over and over again in Tobi's story. Tobi couldn't get hired because he didn't have a degree, and that rejection shaped how he built Shopify's culture. Shopify's famous for hiring based on ability, not credentials. They hire people from non-traditional backgrounds all the time. I think that's relevant right now because we're in this weird moment where college is getting more expensive, student debt's massive, and a lot of people are questioning whether a traditional 4-year degree is worth it. And Shopify's proof that you can build a world-class company without only hiring people with fancy degrees. There's also a lesson about long-term thinking, and this pattern appears over and over again. Tobi could have sold Shopify a dozen times. There were probably acquisition offers from bigger companies, but he kept building, kept compounding, kept thinking decades ahead instead of quarters ahead. And yeah, the stock crashed in 2022. Yeah, he lost billions on paper, but he's still worth $10 billion. Shopify's still a $100 billion company, and the long-term trajectory is still up and to the right. So that's the story of how Tobi Lütke went from being a broke German immigrant who couldn't get hired to building a $200 billion company that fundamentally changed how commerce works on the internet. It started with a snowboard store. It turned into an accidental product. It survived a near-death experience during the financial crisis. It went public and then accelerated even faster. It made aggressive bets on logistics that didn't all work out perfectly. And through all of it, Tobi stuck to this core philosophy of arming the rebels, of giving small businesses the same tools that the giants have. Now look, I'm sure some of the details I got here aren't 100% accurate. I wasn't in the room for these decisions. I'm piecing this together from public sources, interviews, SEC filings, but the overall arc is clear. The pattern is clear. One person with a good idea, persistence, long-term thinking, and a willingness to compete against giants can actually build something massive. It's not easy. It's not guaranteed. Timing matters, execution matters, luck matters, but it's possible, and Shopify's proof. All right, so that's the deep dive on Tobi Lütke is Shopify. That's how close we came to this never existing. 6 weeks of cash in 2008-2009, that's it. And then 20 years later, it's a $100 billion empire powering millions of stores around the world. I mean, think about that. The software a 24-year-old immigrant built to sell snowboards ended up threatening Amazon itself. Think about that trajectory. Now look, I'm sure there are details here that historians or people who were actually at Shopify during this time might correct me on. I'm doing my best with the sources available: interviews, SEC filings, public reporting, but the core story is solid. If this kind of research and storytelling is valuable to you, if you want to understand how these companies were actually built, not the sanitized PR version, but the real version, with all the failures and pivots and near-death experiences, hit that subscribe button. I release new episodes every single day, deep dives into the billion-dollar companies that shaped our world. I'm Alex Morgan. Thanks for listening to Behind the Billion.